U.S. markets have recently experienced their most challenging week since the inception of the tariff, underscoring the immediate financial ramifications of evolving trade policies. In light of these developments, leaders are engaging in discussions aimed at formulating strategies to mitigate the resulting economic fallout. In a notable escalation, China has retaliated by imposing a staggering 34% tariff on U.S. goods, reflecting intensifying tensions within the realm of international trade. This retaliatory measure has prompted increased scrutiny of President Trump's trade policy, raising questions about its long-term viability amidst this evolving landscape. Furthermore, the Federal Reserve has issued a cautionary note regarding the potential consequences of rising tariffs, suggesting that they may instigate inflation and hinder economic growth. Economists warn that the long-term effects of these trade measures could be more profound than previously anticipated. Amidst these economic pressures, President Trump remains defiant, recently enjoying a day at his golf course, which reinforces his belief in a robust economic recovery despite the negative external factors. His social media communications reflect this unwavering stance, continuing to advocate for his administration's approach. The international response to the tariffs is proving to be a critical element in this scenario, as countries such as the European Union and Canada contemplate their own strategies. Their focus appears to be on negotiation opportunities and the pursuit of potential trade agreements with the United States. Meanwhile, serious concerns are surfacing regarding the vulnerability of the agriculture sector to these tariffs. This situation highlights not only the potential adverse effects on farmers' livelihoods but also the reluctance of Republican lawmakers to publicly oppose these trade measures. In this context, tariffs have been characterized as a strategic tactic aimed at encouraging foreign governments to engage in negotiations for new trade deals with the U.S. It is essential to note that these tariffs may not be intended as permanent fixtures. Consumers are increasingly voicing their concerns regarding the potential for price hikes in the near future, which could significantly impact their purchasing power and overall economic stability. This growing anxiety underscores the interconnectedness of trade policies and everyday financial realities. In the UK, Prime Minister Keir Starmer is deliberating on how best to respond to these tariffs, highlighting a shift in the economic landscape that may substantially affect future trade relations between countries. China's imposition of retaliatory tariffs against the US, notably culminating in a 34% tax on American goods, poses a significant challenge for U.S. companies seeking access to the Chinese market. This development is likely to impact business strategies and investment decisions. The ongoing escalation of tariffs between the United States and China could have global economic repercussions, with economists cautioning that the fallout may result in widespread damage to the world economy. The interconnectedness of global trade systems creates a precarious situation for all involved. Furthermore, as China potentially seeks to forge new trade partnerships with countries such as those in Europe and Canada, the ramifications for U.S. influence and market share could be detrimental, further disadvantaging American businesses and consumers alike. As for China's economic forecasts, its GDP growth is projected to decrease to approximately 4% by 2025, a decline significantly attributed to the effects of U.S. tariffs on trade. This anticipated downturn underscores the economic vulnerabilities facing China in light of these trade disputes. Moreover, the tariffs imposed by the U.S. will inevitably have a pronounced impact on China's export-oriented manufacturing sector. Analysts predict a reduction in demand for Chinese goods, potentially leading to deflationary pressures in producer prices, which may stall investments in this critical area. In response, China is likely to implement further fiscal and monetary stimulus measures aimed at bolstering domestic demand while navigating the complexities of the ongoing trade war with the United States. This situation could signify a significant structural shift within China's economy. The stakes have increased, as China's retaliation now includes export bans on rare earth elements, crucial for various industries. This strategic move is designed to intensify the trade conflict and could have profound implications for U.S. technological capabilities. It appears that China's aggressive response is a calculated tactic aimed at gaining leverage in future negotiations with the United States. This approach highlights the intricate and strategic nature of international trade relations. Lastly, China seems acutely aware that U.S. tariffs may result in overall economic harm, leading to resource misallocation and reduced welfare. Such dynamics could significantly influence their timing and strategy in future negotiations.